Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 5:20 in New York. On Friday, happy Aloha Friday as we say on the islands. It is the 10th day of November, 2023, and this is the Daily Report for Gold and Silver, our weekend review. Gold sold off with a vengeance this week, capping the sell-off to today's trading, the deepest and strongest decline of the week, with December gold giving up over $32, 1.63%, settling at $1,937.70. With the exception of yesterday, we have seen every day this week result in gold closing below its opening price. All 5 trading days this week contained lower lows as well as lower highs. I draw your attention to the close of today, down $32.10, and just below gold's short-term 50-day moving average. Looking at the week with a little bit more detail, we can see that on Monday, gold opened right around $1,999, closing below its opening price at $1,988, a $12 decline, but the low challenged the longest-term 200-day moving average. That would change on Tuesday when gold opened below the 200-day moving average, effectively closed lower, well below the 200-day moving average, followed by Wednesday and Thursday's up day. However, when you look at the low, it is the first low that actually challenged the 100-day moving average. Today, not only did it trade and close below the 100-day moving average, but it closed ever so slightly below the 50-day or short-term moving average, doing all of this technical chart damage in 1 week. I have converted our daily candlestick chart to a Heikin Ashi chart so that we can look at the trend and define the strength of the trend. This, of course, would be trading on Monday, and you still had an upper wick, even though you had a pivot from green to red. That would not be the case on Tuesday, Wednesday, Thursday, and Friday. No upper wicks and strong body size on all 4 trading days, and that, defined by a Heikin Ashi chart, is a sign of a downtrend that is still fully intact. Of course, that could change at any moment if escalation of any of the geopolitical issues that we talk about in our opening letter escalate over the weekend. And traders, when we convert our daily candlestick chart into a weekly candlestick chart, you can see how deep and intense the short-term selling pressure was, taking gold from nearly $2,000 per ounce to below $1,940 per ounce, a defined and deep correction. The last time we witnessed gold giving up value like this was the last week of September. That was followed by yet another week in which we traded to the most recent low, right around $1,824. This next chart is also a daily chart of gold futures. However, it is in 3-line break format, analogous to a point and figure chart featured in Western trading. These 2 types alleviate the time element and only move to a new candle when you have had a defined amount of higher highs or higher lows in the market. You can see the color change from red to brown this week, which means that a new box or candle has formed, indicating the potential for further selling pressure next week. We are looking at a daily candlestick chart of the dollar index. The dollar had increased Monday, Tuesday, Wednesday, and Thursday. We talked about the fact that a doji appeared in trading on Wednesday's candle. That will indicate either consolidation or the potential for a price reversal. That was not the case, with the strongest performance of the dollar occurring yesterday, and inversely, the only day in which gold traded higher. I find that very interesting. Today, you got your first red candle of the week in the dollar index, closing below yesterday's opening price. That is the first instance of a lower close this week. We will see if we get follow through selling pressure on Monday. Lastly, I do want to take a look at silver. These will all be daily charts in Japanese average, Heikin Ashi, and what I have up on the screen, a 3-line break chart. Both the 3-line break chart as well as this Heikin Ashi chart clearly define the selling pressure this week in silver as we looked at in gold. However, one interesting facet is when we looked at a Heikin Ashi chart in gold, we had the last 4 trading days all have the absence of upper wicks, and that's what you look for trend strength or weakness. The absence defines more strength than an upper wick. But in the case of silver sell-off this week, I believe the clearest picture is a Japanese candlestick chart. You can see that silver opened near its highs and closed just a tick off of the low today, coming to what I consider to be a critical level that silver must hold if it's going to find support. I based this line on this low that came in back in August, the last time we saw a low of $22.25. A break below this particular price point, we would have to look at $21.90 as the next level, and below that are the lows that came in the first week of October. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Have a great weekend. Bye-bye.